the biggest challenge you feel like freelancers or like self-employed people face when they're applying for a mortgage?
The biggest challenge for me is them not disclosing everything up front. Like for instance, I had an individual,
Hmm.
and she was like, "Okay, well, she does have W-2," and so she submitted the W-2 and everything, and then we find out like 3 days before it's time to close that, oh well, the W-2s that you have is you own that same business. you know, yeah, and so it's like she pays herself properly, but we did not know this information prior to you know going through the whole loan process. And so
Wow.
now this adds an extra step for us because okay, well now we need those business tax returns.
Sup, everyone? This is Elijah from the Side Hustler Society. In this show, we're going to be getting into, I want to say, some heavy finance topic because when you're self employed, there's some things that are going to work out differently for you based on that fact. And most people are going to end up wanting to get a house at some point, but the rules are a little different if you're self employed. They may require different paperwork if you haven't been keeping accurate records, and there are some different things in the process that you should be aware of. They will go smoother if you have had time to prepare. That's why I'm going to be talking with a mortgage broker. His name is Jahccorian Burkes, and throughout his career, he's made a solid reputation in the real estate industry, gaining extensive experience in buying and selling properties, coaching individuals and teams to success, and providing financial solutions for his clients. He's cultivated exceptional customer service skills and possesses a deep understanding of the local real estate market, allowing him to establish long lasting relationships with clients based on trust and loyalty. Prior to his real estate journey, he honed his skills in the life insurance industry, learning the significance of managing long term investments. This knowledge has proven invaluable in his current role as a success coach and mortgage lender, as he assists clients in making sound financial decisions. So let's go ahead and bring him on the show.
Welcome to the Side Hustlers Society podcast, the place where you can find out more about the hustles that are best for you. And of course, make more money in the process. Elijah has been in the gig economy and freelance space for over 8 years and has done over 4,000 deliveries on Uber Eats. Has several video editing clients, many properties on Airbnb, runs multiple YouTube channels, and is the author of the best-selling book, The Anatomy of Financial Success. It's his mission to empower people with the tools needed to be successful. Now, welcome your host, the king of the side hustles, Elijah Bilel.
Okay, Jahccorian, we're officially live and recording. How's your day going so far?
It's going great. Just finished a B&I meeting actually here at the office. Are you familiar with B&I?
I am, but why don't, how about you break it down for the audience? Because some people might not be familiar with it.
Okay. Okay. Yeah. So BNI stands for Business Networking Internationals. It's a networking organization, and they meet weekly. There's like 74 different chapters here in the Houston area. I'm actually the founder of BNI South Houston, and pretty much it's a group of business owners. We have 20 members in this chapter. Several other chapters have a different membership count. But we meet every week around 11:30 to 1 o'clock, and we do like a 60-second commercial. We go around the room doing a 60-second commercial, really just sharing our business practices and asking for leads for those other business professionals. BNI is a great networking tool to use if you are an established business owner, and an excellent business tool to use if you're brand new in order to business, because it pretty much helps you get your name out there, and reputable people can refer you to their clientele and things of that sort. And so that's pretty much what I use it for, is to, being in the real estate and mortgage realm. There's a realtor in the group. I hold the mortgage chair. So there's a realtor in the group who sends their business to me, basically because we get like kudos or bragging rights. The more referrals that we share amongst each other within the group. I have an insurance person that I can refer a business to. There's a flooring person, there's a roofing person, general contractor. Um, Pretty much all things, real estate are within BNI, but there's also other professionals that can be used, like, a CPA, a mindset coach. You pretty much name it. There's someone within the BNI organization that could help you out with furthering your business. And it's a global organization. It just happens to be 74 chapters here in the Houston area.
Cool. One way to look at it is it's kind of a hybrid between a networking group and like a traditional chamber of commerce meeting where you go up there, you give your 30 to 60-second pitch, and everyone knows what everyone does in that room. So once the networking starts, you kind of zeroed in on who you can provide value to, who can provide value to you, and things happen very organically. With the filter of it being like a networking group, because a networking group kind of has like one of each specialty within a certain niche. So it's kind of like a hybrid of both of those. You get the best of both worlds, wouldn't you say?
Yeah, absolutely. So yeah, like you said, there's only one seat for that particular industry. So for instance, like me holding the mortgage chair, there's no one else within mortgage that can come into the BNI group and ask for referrals and things of that sort. Today we had visitors that one of the guys ran a nonprofit. If you have a nonprofit, it's a free entry for BNI, but it's like a $1,400 a year membership fee. And let's say there's a cleaning company that also visited today. And so if they get into the chapter, they'll pretty much get all the maid service cleaning business that we're going to refer, out to possibly other people, but then we get bragging rights to refer to someone else within the group.
I think networking groups are highly underrated, to be honest, especially if you're a freelancer or some kind of a contractor. You really should join a networking group. And if there's not one available to join, consider starting one.
Yeah, you can definitely start one. And even, I would say a great tool that we kind of like just started implementing within the last year and a half or so is that we offer a breakdown for individuals. Like, let's say if they can't pay, because being a startup business, everyone doesn't have $1,400 to just shove out of their pocket at one time. So we're able to break that up into 6 different payments. It's like $200 something a month. That way they can, get their foot in the door and then start generating, business to be able to pay for the remaining of the membership. So it's a great tool for brand new businesses. It teaches you how to be professional and to enhance your 60-second, pitch every week, pretty much, because you're doing the same thing every week.
Right. That's actually a good segue into your journey as a mortgage broker. So do you want to tell the audience, like, how did you get started as a mortgage broker?
So I actually took, I guess, the long route rather than just like jumping into the mortgage industry. So I've been in the real estate industry for 8 years. I kind of started out as a consultant, but I have been a licensed real estate agent for the last 6 years. What pushed me to getting my mortgage license 2 years ago is when we had a spike in interest rates, like after COVID. And so, me as a realtor had a lot of leads, but people were not, pulling the trigger on purchasing a home. And mainly it was because interest rates were too high, or they felt like they didn't have the capital in order to, make that decision. When, in actuality, buying when the interest rates are high is the best time to purchase a home because at that point you're able to get price breaks on the actual home price. And that's actually going to set you up for financial success in the future when interest rates do drop down. Because interest rates go down, the home values goes up. But back to your question is I had a lot of buyers that was not, getting pre-approved. And so I was just like, okay, well, let me go and just learn this, mortgage industry. I didn't actually plan on being a mortgage lender. I was just like, let me just learn mortgage and to really figure out the other side of real estate. And so what I actually discovered, and I think, it's pretty clear, but mortgage lenders got to get paid. and so with them getting paid, sometimes, the clients, they get the short end of the stick when it comes to their interest rates or being charged, fees in order to borrow money in order to purchase that home. So with me being a realtor, I said, okay, well, look, I know the pain points of everyone within a real estate transaction, is looking at, from the seller's agent to the buyer's agent to the buyer and the seller, within that particular transaction. And so my name of, the business is do whatever I can to get this person into a home. I discount as much cost as I can in order to make sure that my clients get the best deal, meaning they get the lowest rate and the lowest fees. And that has helped me be successful in the mortgage industry.
Cool. So that's I get what you meant when you said you went the long way. Like so a person may inspire to become a mortgage broker and then they go ahead and go straight to the process of becoming one.
Yes.
But you started out on the other end and just saw that there was well, I won't say need. Well, there was a need, but you saw that you could serve your clients more if you learned more about that side. And learning more about that side lets you down that path. And here you are where you can provide value on both sides of the equation. And likewise, obviously get paid on both sides too.
Yeah, exactly. And I would say where it does benefit the client and also benefit me is that I'm able to close more deals because let's say if I'm listing agent or the buyer's agent, I'm able to discount, my fees when it comes to the mortgage side in order to help them get into the home, or vice versa. I can discount my fees on the real estate side in order to make sure that they, can qualify for the different mortgages that's available. And so it just basically gives me that reassurance and helping me be able to help more people at the time where, they are considering to purchase a home.
It's interesting you say that because it really depends on the person. But when it comes to sales, I'm the type of person I always have a quality over quantity approach.
Mhm.
Like some people, they will talk to a bunch of people trying to sell their service or their product, and they hear no, all right, no problem. I move on to the next person,
Mhm.
and they make their commissions through sheer volume, and it all evens out. But there are some people, probably closer to me and maybe even yourself, where they really want to work with the client. And if they can do what they need to do on their end to make that work, then you end up having less clients, but you can end up getting paid more, or you'll end up getting more referrals, which in turn gives you more of your time back so you can serve your clients as opposed to having to generate more leads.
Yes.
It's an interesting and there's not any right or wrong side. It really just depends on your personality side. But if you are going to go with his approach, you may need to get an additional certification or something like that, just so you have more tools to move things around. Because ultimately, you may end up getting paid the same, but you could close more clients because you just have more ways of it balancing the equation for them.
Mhm.
And a lot of times they'll remember that. And this is when you start getting calls out of nowhere passively. It's like, hey, you helped my cousin, with this, and then boom. So it really balances out. It's very interesting to hear that side of the equation.
Yeah, and that's pretty much my business model. I don't really go out and fish, for clients anymore. It's pretty much like, hey, you help this person that I know. I have this family member or this friend that needs help as well. You think you can help them? And even for realtors, once their client does a deal with me, they're saying, oh, hey, this worked out so great. Can you help me with my other clients? And so it just pretty much keeps me from having to go and invest in all of these other marketing and lead generating services
Mhm.
uh, that cost. And sometimes you do get a benefit out of it, but in most cases you don't get a benefit out of it because it's all a numbers game. But
Yeah.
it just makes it to where I know that when I do get a call, that I probably have a 70 to 80% closing rate with that individual because it's already a warm lead because they've already talked about the experience that they've had with working with me. And even the people that are not let's say that come to me and they're not really ready to buy a home, because I provided so much valuable information to them, they feel comfortable with being able to refer me to someone who is ready. And they just end up coming back and working with me on a later date.
Right. I'm going to refer to a book by Blair Singer. It's called Sales Dog. You don't have to be an attack dog to be successful in sales. Like there are 5 dogs. There's the pit bull, and these are just metaphors for these different sales personalities.
Mm-hmm.
So there's the pit bull, the golden retriever, the basset hound, the poodle, and the chihuahua. And based on your personality type, there's different tactics and sales techniques you can use.
Mm-hmm.
You come off like the golden retriever. Now that's someone who they don't really want to have a bunch of clients because they don't like prospecting for all these like cold leads. So they really prefer to work with their existing clients and really prioritize referrals. And they do whatever they can to facilitate that process. And that sounds like essentially that's what you've done.
Gosh, yeah, I would say that, but now I can definitely be a pit bull when it comes to negotiating. Being that, I'm going to make sure that my clients are protected. And, one of the things that my clients do absolutely love is that, I'm not an individual that rolls over, when it comes to, having, an aggressive realtor on the other side of the transaction. So it's pretty much, once my client lays out to me what they want, I'm able to have a firm stance on delivering, those desires when it comes to that as well.
For the people who are watching me on video, you might be wondering, like, Elijah, what the hell were you doing? You just look back for like 15, 20 seconds. I was actually looking for the book I just referred. I was going to show y'all. It's actually in my car right now. I'm not going to run out there and get it, obviously. I'll flash it on the screen and post at it so y'all can see the book I'm referring to.
Okay.
But I was going to ask you, well, what is your biggest source of leads? But I think we already kind of answered that, didn't we?
Yeah. Well, yeah. So my biggest source for leads is word of mouth, but it's other realtors actually, and just because I'm able to add so much value to them, being most of realtors only have one license, real estate license. So like, let's say for instance, there's always so many people that want to buy a house, but everyone is not pre-qualified. And you have some clients that don't want to get pre-qualified before they go into a house. Well, with me being a dual license agent, I can go and open that door and have those pre-qualifying conversations with the buyers. And I pretty much, get them pre-approved from those particular conversations. And then I can revert back to the agent that referred me, tell them that, okay, well, yeah, this is a good client to go with. I'm going to have them fill out the application and whatnot. And pretty much just throwing that client back to the realtor that referred me. And so that's pretty much my biggest lead source when it comes to the mortgage side. And on the real estate side, it's word of mouth. I'm always my number one rule is to always do more than what you pay for. So if you always do more than what you pay for, you're going to have a good taste in everyone's mouth or most people's mouth. And then, so they're going to refer you out to their friends and family as well. And so that's, my lead source when it comes to real estate. And of course, posting my productivity on, the different social media platforms to just pretty much let the world see that, hey, I'm busy and, I kind of know what I'm doing.
Got you. Okay.
So
I think.
Yeah.
Oh, go ahead.
No, I was just gonna say that's my way, and I just feel like that's really organic. Now I have been on teams, the real estate team, to where they had a partnership up with like Zillow or Op City or Veterans United in order to get those leads or things of that sort. Now the rest of the team may take those, but I just feel like it's something that is difficult for me to do, being that it's hard to kind of gauge a person's level of seriousness if you don't know them from yesterday and you're just picking up a phone call. And, it's kind of like, I prefer to have the warmer transition. And like you said earlier, like that's the reason why there's a benefit of having both licenses, because I don't have to take on so many clients. I can take on the right clients and still make the same amount of money, if not more, than what those agents do that are taking those leads.
Right. I mean, when you think about it, why would you take those leads because you've been kind of spoiled, but you set up the system that allows you to be spoiled. So your leads are warm, if not sometimes sizzling hot, and then you're gonna go to this cold leads, sometimes ice cold at that. Like why? When you could spend that time to better serve the warm leads that will oftentimes facilitate a transaction that will benefit both of y'all, because there's just a much higher chance of you closing.
Yeah, definitely. Even people that I have not worked with, like B&I has been great for me. My first lead in B&I was a $2 million farm and ranch property,
Nice.
which brought me 60 grand, on just that first lead. And this was a person that did not know me. They're a commercial banker, and had a client that came in and they had got a property inherited to them, per se, and they didn't want to keep the property, and so they needed an agent to help them. And this person, and I said, "Oh, okay, well, we have Jahccorian, our commercial realtor in the chapter. He will be more than happy to help you. Send me the lead." I called her. Next thing you know, I'm there doing a listing appointment, letting them know the estimated value of their property. And the spill on it is that they actually thought the property was just worth $1 million. And so what we did was we separated the property into two different transactions, two different parcel numbers, and we were able to sell each one for $1 million each.
Nice. I don't think I have anything else to say after that. The statement kind of speaks for itself.
Yeah.
But that shows the level of care you have for your clients, and then on the back end, it also shows that there's a direct benefit from that too, because it reflected in your commission.
Yeah, definitely. Yeah, and actually, so on the first property, the first half of the property we sold, I actually had the buyer as well. But I like to be fair to my clients, and so I referred that buyer to another agent that was on the team for them to represent the other side.
Mm-hmm. Yeah. So it's not a conflict of interest.
Exactly. Yeah. So that one particular lead generated $90,000 for the whole entire team, where my cut was $60,000.
Nice.
And that's just all through the power of B&I. That was my first lead.
Well, like I said, everyone, y'all really need to now keep in mind that what he's talking about is higher than the networking group. With that being said, in concept, it is a type of networking group. To become a part of one, if not start one, I don't know what else to say, folks. It has massive benefits.
Yes, it does. And it's always, I would say, there's, I can't think of one referral source that's better than, the people that you surround yourself around. The people that you surround yourself around are always going to be better referral sources for you, just because they can kind of warm those clients up before you even have a conversation. And so now all you have to do is pretty much go in and close it.
Right. Yeah. So I would suppose that now would be a good time to kind of hop into the buying process, because people who are self-employed, they probably have a lot of questions when it comes to this industry. But before we hop into looking at it from the self-employed perspective, could you explain exactly, for people who may not be familiar with it, what exactly is like the mortgage lending process just by itself?
So the mortgage lending process pretty much by itself is that the first thing and foremost is a lender is going to ask you to fill out a loan application. We have to have a loan application before we can even disclose, to you what, the current rates are. I mean, there's lenders out there that'll just, throw out a number. They'll say, oh, well, the interest rates are 7% or 6% or 5%. But they may say that, but honestly, they don't really know what you qualify for until they are reviewing the loan application in entirely. So you may say that, okay, well, I check Credit Karma and my credit score is a 750. Well, on the mortgage side of things, we look at the score a little bit different. We look at the actual FICO score, And you may see a 750 on Credit Karma, but our system shows us 720 or maybe a 725. Which there is a difference when it comes to the interest rate in that aspect. So first thing, you have to fill out a mortgage application. On the mortgage application, the most important things are going to be your name, your date of birth, and your social. And that's because we pretty much can't move forward without that information. And then that's going to be your marital status, because we need to know if there's going to be another spouse on there that, income we can possibly use, or if not income, then the liabilities that we're going to have to calculate as far as to make sure that your DTI, and DTI means debt to ratio.
Debt to income ratio.
Yeah, is in the right threshold for us to be able to move forward with the loan. So after you complete the application, next is going to be financials. So now this, basically, everyone does that first part. Now the second part is going to be, sorry, it's the lights are in motion, so I have to move around a little bit.
Okay.
Can you still see me good though?
Yeah, I can still see you.
Okay. So the second part is going to be submitting your financial documents. We're going to need a driver license or a valid ID. And then after that, it's going to be 2 months of bank statements. And if you are 2 months of pay stubs and 2 years of W-2 if you're employed. If you're self-employed, then it's going to be your ID, 2 months of bank statements. Now you can go a couple different routes. You can either do 12 months of bank statements, and you can do a bank statement loan, or you can do your tax return. And what we're going to look at is your 1040 and your Schedule C, and it's going to be line item 31 to see what your actual income is minus expenses and everything of that sort. And
okay.
So, yeah, that's what we would utilize for a business owner and W-2. Now, if you are a W-2 employee, it does make things a lot easier, because we won't necessarily look at tax returns. Even if you own a business, we can qualify you just by using W-2, and we don't have to look at tax returns or your expenses. That we don't have to take that in consideration. Now, for business owners, if you're not using 12 months of bank statements, we have to have tax returns.
Okay. So which one of the two do you feel would be best for someone who is a business owner, who is self-employed or freelancer to use? The 12 months of bank statements or the tax returns? I know you said that if the bank statements aren't available, if that's not an option, then you have to go to the tax returns.
Mm-hmm.
But in your opinion, which one is the better to use for someone who's self-employed?
The better to use if you file. I know, being a business owner, like, realtors, everything, most of your money gets ate up in expenses, to where, you're taking clients out on dinners or, gas, like car, stuff like that.
This software that I'm using is not free.
Yeah, exactly. So, if you're anything, like, those particular industries, you're going to have a lot of expenses. And so what we find, in most cases, that bank statements are going to be the best option. Now, the thing is that when you do a bank statement loan, the interest rate is going to be higher than it would be if you're utilizing your tax returns. Mm-hmm. Being that the bank statement is pretty much going to be variable income. And how we calculate your income off the bank statements is that we add up all your deposits over the last 12 months, and then we divide that by 12. And whatever that number comes out to is your income, and then we still have to deduct your liabilities from it, such as credit cards, auto payments, if you have any existing mortgages or loans or things of that sort, student loans too. We have to deduct those expenses from what your average income is per month.
So would you say, it sounds like they both have pros and cons. So obviously, like a tax return, and like you said, your expenses will be reflected in the tax return. But if the numbers line up, it could give you a more favorable interest rate versus using the bank statements. Mm-hmm. So that is something to consider.
Yeah, and so the other thing is that, let's say if your business has not been in existence for more than 2 years or longer, bank statement will be the best option to use, because if you're going to be utilizing your tax returns, we have to have the business in effect for at least 2 years.
Right.
But bank statements, we can do 12 months.
So would you say, and this is important because some people, well, you know what? I think it's becoming more common. I mean, this is called the side hustle society. So it's not uncommon for people to have multiple streams of income, or maybe even multiple businesses. Well, I say businesses lightly. I'll just say multiple streams of income. If someone is planning on buying a house within the next, I'll say 1 to 3 years, it is a good accounting practice to have separate bank accounts and keep everything separate for your income streams. But if your goal is to buy a house in the next year, 1 to 3 years, would you say it's a good idea to just go ahead and bite the bullet and start making it so that all those direct deposits come under one bank account, so that it'll make this process, it'll give you more optionality?
I would agree, if only if you're the sole owner of that business.
Yeah. It's assuming, because obviously there are some businesses where you have partners, but a lot of people that listen to this show, they'll be self-employed, or they'll be like freelancers. So like you could take someone that what example I want? Let's say someone's a graphic designer, right? So they make money graphic designing. They're on Fiverr, they're on Upwork, they have clients in real life too. So they make their money that way, and that's going into one bank account. But let's say they have a YouTube channel and it's monetized and it makes like maybe $1,000 per month, and they have that in another bank account, because technically that's another business, even though they haven't incorporated, they're sole proprietor. So if they're looking to buy a house soon, okay, well, let me just go ahead and take that YouTube income and reroute the banking information and just have it all under one account. They'll give me more options when I'm talking to you. When you say,
yes, I definitely do agree with that. Just because we're going to take 12 months of that one particular bank account. We're not going to use like all the other different bank accounts. And so if they have it all going into one, now their average per month is going to be higher than it would if they were having separate, bank accounts for those different businesses. And as long as they have an LLC, I mean, we can run it all under the same business.
Cool. That's definitely good for people to know, because like I said, it is a good accounting practice to separate things like that. But when you're looking to buy a house, and this is why it's important to really plan out. I'll say plan out your life in at least 5-year intervals. That way, you can go ahead and do something like this, and you can just do it for 2 to 3 years. The moment you get in the house, go back to separating everything for the accounting purposes.
Yeah. And so on the mortgage, we have to like verify that the income is going to continue for at least the next 3 years in order to be able to loan on any property. And so that I would say that is a good business practice to have. But when you are trying to buy a house, you want to show, if you're utilizing bank statement, you want to show the maximum amount of earnings, that you can.
Right.
Yeah.
And this is actually a good question, but some people, ultimately, the tax return kind of serves as a profit and loss statement. That ultimately, that's what that is in this context. But for businesses that have their own profit and loss statements, does that really come into play at all here, or not really?
It does, because if we're using tax returns, we have to have a year-to-date P&L statement, meaning that from January 1 to whatever date that you're going to be closing on or starting the loan process on. We need to have a profit and loss statement showing that the income is the same as reflected on the tax returns.
Cool. So if this is a good business practice you should be doing anyway.
Yeah.
But just for argument's sake, if you are going to be doing the tax refund process, you do need to have the profit and loss statement too. So that's part of that process.
And we will, like, for either one, we will need like a letter from the CPA, just stating that, hey, them purchasing this home, it's not going to, impact the business in a negative way or anything of that sort. So that pretty much gives us our, guarantee, that this income is going to be continued for the next 3 years as well.
Okay. And just kind of bringing it back to the smaller, like self-employed or freelancer, someone that doesn't have a CPA, they're sole proprietor. Does that still come? Like, what do they do if they don't have a CPA?
If they don't have a CPA, if you're a great lender, you could possibly refer them, someone, or they would have to have the person that prepares their taxes in order to be able to state that, they are financially secure, as far as the remainder time for us to be able to loan.
Okay, so that means it doesn't have to be a CPA. It could also be an enrolled agent.
Yeah.
Okay, cool. That's definitely good to know for people. What is the biggest challenge you feel like freelancers or like self-employed people face when they're applying for a mortgage? Is it kind of what we've already talked about, or is it something else that you feel is the biggest challenge?
Um, the biggest challenge for me is them not disclosing everything up front. Like that's the biggest challenge. Like I constantly have to tell, clients that are trying to get a pre-approved for a mortgage, hey, I'm not the police. Tell me your whole entire situation. Because once we start this process, the underwriters,
He's an American gangster.
yeah, the underwriters are going to find whatever you're trying to hide. But if you can tell me beforehand, I can kind of let you know the exact things that we're going to need or what we're going to be looking for in order to help you, or to let hey, now it's not a good time. I don't want you to risk losing your earnest and option money or paying for an appraisal, and this loan is not going to go through. Like for instance, I had an individual, and she was like, okay, well, she does have W-2, and so she submitted the W-2 and everything, and then we find out like 3 days before it's time to close that, oh well, the W-2s that you have is you own that same business. Yeah, and so it's like she pays herself properly, but we did not know this information prior to going through the whole loan process. And so now this adds an extra step for us, because okay, well, now we need those business tax returns, to show that whatever you're paying yourself is also reflecting on the tax returns as well. And it's just like as an additional step, but that could have all been avoided, and we wouldn't have to delay closing or anything of that sort had we known this information up front.
Right.
So it's just simple things like that.
Okay. That actually kind of makes sense. I will say this: people, as self-employed people, since we don't have to answer to anyone technically, well, obviously to our clients, but I mean, like in a general sense, we don't have a boss or anything. It creates I'll say a fear of ridicule when it comes to just interacting with. I'll go ahead and say financial people, because we don't have to report to anyone, and when it comes to talking to someone like you, we may feel hesitant to talk about certain things, and that's something that we really need to get over, because it's the conditioning that employees don't have, because they have to report to people. But there's not this massive like emotional stagnation about talking about stuff like this. If you're not careful, you can develop that. So it's just something that we should be mindful of as self-employed people. And that's actually another reason why, even on a part-time basis, maybe just talk to a financial advisor, make sure you're moving in the right direction. Obviously, there are benefits to that financially, but if anything, it'll help so that you don't start cementing in this mentality, because unless you're going to live in apartments all your life or rent all your life, you're going to want to eventually buy a house. And this is an opportunity to stop that from happening in the first place.
Yes, it definitely is. And I would say that, another, I guess like a good tip for people that, are trying to set themselves up, to be able to purchase a home. Let's say, for instance, like credit cards and things of that sort. So, you may have, certain individuals who, their whole life operates on credit cards, even though they, they pay the balance or whatever, like that every month. But, a great tip is when it comes to like American Express. As a lender, we want to encourage buyers to utilize American Express at the time when they're trying to purchase a home, just because the American Express, whatever the balance is, we don't quite count that into your DTI, to your debt to ratio income, because that's something that's excluded. And it's excluded because you normally pay the balance every month. And so as long as we can see that you have the funds in your account in order to cover whatever that balance is, now you don't have to actually utilize it to pay that balance right away. But as long as we see that you do have the funds to cover it, then it's all fine and dandy with us. That's one debt that we are going to exclude from your debt to ratio or from your liabilities, pretty much. And anything that you have that's less than 10 months. If you have a car payment and you owe less than 10 months, on those auto payments, then we're going to also exclude that from your debt as well. When it comes to student loans, if you're going conventional, and so a lot of people there like in student loans forbearance, and so let's say they may not have a student loan payment, but what we're going to do is we're going to calculate 1% of that student loan balance as part of your DTI in order to get that payment, even if you don't have one. So what I do encourage people to do, this is another challenge, is that if you don't have a payment, I encourage you to negotiate with the student loan department in order for you to get a payment. If it's less than 1%, that's actually going to be more beneficial for you rather than going and not having a payment for it, because we're going to automatically calculate 1%. If it's FHA loan, we're going to calculate 0.5% for each student loan.
Okay. Yeah, so these are little, well, I guess I'll go ahead and use the word. I was going to say like financial hacks when it comes to just knowing about this stuff in the process. I guess it's fair to call it a financial hack, when you say.
Yeah, I would say. I mean, it's just something to kind of think about before you apply for a mortgage, and to kind of like go ahead and get your ducks in a row before, so that, okay, well, when I do get ready, everything is going to be for sure fine. I don't have to stress or worry about, okay, well, can I qualify or can I not qualify for this based off of what you have in your credit.
Right.
Yeah.
Okay. So I would ask, what type of, in terms of loan programs, have you come across any, or do you know of any that are best suited for like self-employed individuals or home buyers?
Depends on the individual situation. For self-employed people,
It can vary so much.
It varies, how much money they're making and things of that sort, and how they have their business structured overall. But I would just say for, self-proprietary business owners, if you can't qualify the traditional way, bank statement is the way to go. Or you can do DSCR loan, where, it's kind of, similar to a bank statement, and we just have to verify assets pretty much. Right, so whatever you have, like let's say if you are a day trader and you have a large amount of assets, what we'll do is we'll take those amount of assets, we'll divide it by 12, and then multiply by 50% in order to get your income.
Okay. And that's obviously, you said assets, so that same goes for if you own real estate properties or like anything like that.
Yeah, correct. Yeah, real estate, we can utilize that. If it's an income producing property, we can always utilize, that rental income that you generate from it. But when I say assets, I'm speaking of liquid assets or stocks, or even crypto as well now.
Yeah. I can't believe we're actually saying that now.
Yeah.
I actually never, for the longest time, I didn't consider crypto an asset. I considered it speculation.
Yeah, well, now it's for us in the mortgage world, it's considered an asset. Even though it changes, by the minute, sometimes, but.
Well, I'm pretty sure you probably find this hilarious to some extent too, because you probably remember when crypto was first introduced and, Bitcoin, banks were literally shutting down your bank account if they even suspected that you were involved in that stuff. And here it is now being considered an asset. It's hilarious.
Yeah, exactly. Yeah. That's definitely us. I actually remember when I first found out about Bitcoin, it was less than $50 a coin.
Oh,
yeah, and now we see it. It went over $100,000. I haven't checked to see where it is today, but I know I have quite a few clients that did put some money in Bitcoin. That are not very happy. Like today. But that could change. Over depending on what's in the news.
right. I'm actually. You got me kind of curious. I'm actually looking up how much it is right now.
Okay.
What is a Bitcoin at currently? My phone doesn't want to act right now. Well, I guess it's not that important, but I might pull it up later in the show.
Yeah. Okay.
But kind of circling back to the topic. One thing that I'm not gonna say it's just people who are business owners. The employees can make a lot of money too.
Yeah.
But oftentimes business owners or those who are self-employed tend to be very ambitious people. So when they're looking to buy a home, they may be putting down a bigger down payment than just the standard, 20%, so they can avoid PMI. So if they actually were to put down a bigger down payment, let's say we use 40% just as a running number in this case, does that play an impact in the interest rate in any way? Could it work in their favor?
Yeah, it plays a huge impact on there because it's all about LTV, which is loan to value for the property. Now, of course, at 20% down or higher, you eliminate the PMI, the property mortgage insurance. But that's separate from homeowners insurance. You always have to have homeowners insurance. But the PMI is what the bank or the government will enforce to have on the loan anytime the LTV or loan to value is over 80%. You are putting down more than 20%, of course, your interest rate is going to be significantly lower than if you were to put, a lower down payment. So like, for instance, like I have this one client that I'm working with. Originally he had in the file that he was going to put the 20% down, and with 20% down, he got like a 6.75. Well, when he decided to, okay, well, hey, I have this asset that I'm going to sell, and I'm going to utilize these proceeds to make a large down payment. He put down 40%. His interest rate went from 6.75 to 6.05. Which saved him, over the 3/4 of a point, pretty much.
Okay.
Yeah. So that's the benefit of putting more money down. And as far as payment wise, it adjusted his payments by like $400, but not only because of the interest rate, but also because he was putting more money down.
Yeah, so you have more equity starting out.
Yeah. Exactly.
Okay. And going the other direction, and this is I wouldn't mind hearing your personal opinion on this, but so many people, they're so scared of a deal that will result in putting less than 20% down because of the PMI. But a lot of people don't realize that when you do get over the 20% threshold, however long it takes, the PMI is going to go away.
Yeah.
So like,
well, only on conventional, it does not go away on FHA.
Say what?
Only on conventional loans, the PMI would go away, but not on FHA.
Gotcha. I'm glad you made that distinguishment. Okay.
Yeah. So for FHA, the PMI stays on there for the life of the loan. So it stays on there for the full 30 years if you don't refinance into a conventional. On a conventional loan, you can call the bank and ask them to drop it at 80%, but it will automatically fall off at 78% LTV.
Okay. So do you think that, let's say the only way like a person can move forward is to put down under 20%, would you just recommend that they just hold off on buying a home? Or do you think that they should go ahead and move forward?
I think that they should go ahead and move forward. The reason being is so I always tell people, it's like you're never going to get away from paying mortgage. You're either going to pay someone else's or you're going to pay your own. Even if you're in an apartment, the person that owns the apartment, 9 times out of 10, they have a mortgage own that entire apartment complex. And so, you're renting an apartment where you're contributing to that mortgage cost every month. I'm all in favor of paying your own mortgage, just because, like, let's say in a year, 2 years, 3 years, 5 years, when you get ready to move, you're going to be able to recuperate some of the money that you paid, in every month, for that particular property. So, for instance, if you can qualify for a home at 3% down or 3.5% down, it's much better to go ahead and purchase the home or the condo, rather than, renting, pretty much. Just because, you're going to be able to get that appreciation. Now, where it comes in a huge benefit, let's say, for instance, like right now in this market is, we would consider it to be a buyer's market, even though when you look at the reports, it's going to say that it's balanced. We would consider it to be a buyer's market just because the homes are typically going under the listing price. So if but the interest rates are considered to be high right now at this point. So if you could purchase a home right now would be the time to do it, because when interest rates are high, like I said, you get a deal on the property, even if it's 3% down. Well, let's say the interest rates are pretty much expected to continue to drop down, but it's going to be a slow drop during 2025, and we're expecting to have a property value increase once we get closer to 2026. So if you put 3% down, and then we see numbers like COVID again in 2026, well, that property has appreciated so much. You can call, next year and ask for a rate and time refinance, or for the bank to send an appraiser out to get your property reappraised, and you may already be at that 20% mark to drop that PMI. So you don't have to wait that 7 to 13 years in order for that PMI to fall off. You can actually trigger it right away.
Okay, cool. And I think this is underrated, but let's say that, well, what you said is more likely to happen than not, but let's just, in some other alternate universe, it's not going to happen. We mustn't forget that you can pay down the loan to the extent that gets you above, the 20%, and then it will fall off that way too. It requires some financial planning. You might need to get another side hustle, which means that you're in the right place. You're listening to the Side Hustler Society, but you get the income up and get it above that threshold, it can fall off that way too.
Yeah, that's definitely. So what I recommend to my clients is to, however you can. So once you make the mortgage payment for that month, make a separate additional payment of at least $200. If you make a separate additional payment, it's going to cut your mortgage time frame from 30 years to 25 to 23 years. And that's just by making an extra $200 a month payment. If you can make more, and you're directing that extra payment strictly towards the principal rather than your future.
I was going to say, you want to make sure you specify that, because now some companies, they will do it by default, but you got some companies, if you don't tell them make additional payments and direct it towards the principal, they'll direct it towards the interest.
Yeah, they will. So, well, now I think most banks have moved to being able to control your mortgage payments by app. And so, you can distinctively select, what you want that extra payment to go towards. Now, if you make it all in one payment, like let's say your mortgage payment is $1,500 a month, and you say, okay, well, I'm going to pay $1,700 this month.
Oh,
I don't
God.
understand that, because now that extra $200 just went towards the next month, rather than actually going towards the principal. This is why I encourage people to make separate payments, so you can directly, say that, hey, this extra payment I'm making is going to go towards the principal.
Yeah, and just so people can understand the totality of what he's saying, when you start a loan, you're paying mostly interest until you reach the halfway point, and it starts to bounce out to where you're paying mostly principal. But essentially, they want to get their money first.
Yeah.
That's why if you go ahead and pay the note, and then you make an additional payment and target it towards the principal, that works differently from making a bigger payment on this note, because it's just going to get rolled into the next month's payment. And if you just realize what I said, by default, most of that's going to be going towards the interest.
Yeah, that's exactly correct.
For those that were curious, since I did bring it up before, the Bitcoin price is now at this, so it's about $95,000.
Yeah.
I thought I would bring it up because, well, we talked about it, and I just felt the need to bring it up because of that.
Yeah, and I think what was that, like a $2,000 drop in just a day?
Yeah.
Yeah. Yes. Like I said, people that they jumped on it. Depends on when you jumped on it. It was the right time, but even now, you're less money today than you had yesterday on it, and there's a huge possibility that it will go back up. I think I just saw in the news that Trump signed an executive order to scrape the penny, meaning that they don't want to produce pennies anymore because of the actual cost of producing it, more expensive than the actual value of it. So,
Talk about inflation.
yeah, the
But
financial world is forever changing.
it's funny you brought that up because on my next question, and I was going to say that if you don't want to answer this, I understand why. There's no problem because I usually stay away from politics, but I do think it's relevant to this conversation. But based on what you're seeing, is there any changes this administration might be doing that's coming down the line that you feel that's going to affect the market in any way, whether it be positive or negative? Is it good to keep an eye on this stuff?
Yeah, definitely. So, I mean, first and foremost, I just want to say that I'm not a Trumper, or I'm not a Republican, nor do I consider myself to be a Democrat.
Same here.
I'm an individual for what's fair and what's going to be beneficial to America, as a whole. Just being that I am an American. So what I will say is that there were two things that are two particular industries that I do see that will have a huge benefit, with the Trump administration, and those two industries being real estate and oil and gas. But you can also add crypto in there as well. And I would say that just because Donald Trump himself is an investor in all three of those industries. And so usually, when he parks his money at, he's going to make sure that those industries are taken care of, and that we are going to see a growth in those. So I will say, I do see a benefit for real estate investors. I see a benefit for oil and gas workers and investors. And I do see a benefit for, crypto, as well during his administration. Now, whatever, we feel or think about, him as an individual is going to be completely different from the financial advantages, that, you may have if you're in those industries, that, you can reap the benefit of. And so what I will say, what we have seen already, within, the past few weeks of him, being in office, is we have started to see interest rates drop a little bit. And just, when he was elected, I can tell you that, on properties that were over $700,000, our phones started to ring again, for those particular, properties in value. And, typically, I mean, it is just because, the individuals that can afford, that price point, they typically do well, when a Republican is in office. And so, that's where we can see the benefit, as far as that goes. Now, on the downside of things, this is why I encourage people to move forward with buying a home now if they can, because let's say the interest rates continue to drop. Well, if the interest rates drop, property value is going to increase. And then it's going to get to the point to where the property value has increased, but an individual working a 9 to 5 or even, sole proprietor business owners, their income may not increase as much or as fast as the property value has. And so we're going to start to see them get priced out of homes or priced out of certain neighborhoods, kind of the same way, the same thing that happened during COVID. for those that were able to buy a home during COVID, they were good. But let's say when COVID ended, now, those individuals who were preparing to be able to buy a $300,000 home, now, that $300,000 home is 400, 450, and then they're forced to go into something that's a $300,000 home when that home is probably, was only worth, 200, 250, beforehand. And so, that's what I mean by, getting priced out of, the home that, you can currently qualify for. But, of course, the needle is going to move once the interest rates drop. And so what we've been seeing, lately is, investors taking advantage of, the higher interest rates just because they can pretty much bear that risk, and they're getting properties at a discounted rate. So let's say when interest rates go down, now that home has more value, they're going to cash out, by either selling that property or refinancing once the property appreciates to be able to buy more homes.
Gotcha. Okay. You looked at it from a very logical way. I implore a lot of more people to do that, because regardless how you feel about Trump, Bitcoin went up hugely once he got elected. And if you took the emotion out of it, once you were looking at the polls, it's pretty clear that he was going to win. You knew that Bitcoin was going to skyrocket, and you're like some people, you made sure some money was already in there, so it either doubled or tripled in value. I'm not naming any names, but I'm just saying.
Yeah.
But you had to take the logic. You have to look at it logically and take the emotion out of it, whether you're a fan or you hate them. So yeah.
Yeah, I agree.
Right. Okay. So I would say we're gonna start winding down the podcast in a bit, but towards the beginning of the show, you did mention that there are some things that it's important for people in general, but also those who are self-employed. Once you've actually gotten into your home, so obviously you got approved for the mortgage, you're in the home, they should be paying attention to. Do you want to elaborate on some of those things?
So after you got approved, for the mortgage, now what I was saying is basically like for first-time home buyers, right. and this is what I see, for, when you get pre-approved, people get overly excited, and it's like, oh, okay, hey, I've been pre-approved for this home. Now I want to go out and get the biggest and the most expensive home I can afford. Now I of course, you're able to do whatever you choose to do, but that's something that I do not actually recommend. I recommend for first-time home buyers to approach their first home from an investment mindset, being that in most cases, your first home is not going to be your last home. So what I would encourage you to do is, like I said, approach it from an investment mindset, meaning that, okay, well, let me find a home or a neighborhood that has a potential upside in appreciating, being that, you don't have to go in and put much money down, but the property is going to appreciate so significantly, it's going to allow you to move into your next home with a larger down payment. Or, you're going to be able to keep that first home that you had and maybe, refinance out of it when the interest rates are down lower. And now you have that as an investment property or rental income property. And while you move into your next property, that's the kind of, mindset that I encourage for first-time home buyers. And a way to basically hear that, I would say purchasing in brand new neighborhoods or in opportunity zones. Brand new neighborhoods have a huge, potential upside, just because you're going to kind of let the builder do all the work, depending on what phase they're in the neighborhood. So neighborhood has sections, phases. This is what I encourage everyone to ask, when they go into a brand new community, whether it's Jahccorian, Lenore Homes, or any of the mass, builders. Ask them first question, hey, what section are you in? How many sections are you going to have? Okay, well, what phase are you in as well? Because then that'll let you know, are you at the beginning, middle, or end of the development? You want to be in the beginning or the middle. The reason why is because the developers or the builders, they're going to continue to increase their price the more homes that they sell. So if they increase their price, your property is also appreciating, because the appreciation comes from the comps of that particular neighborhood of homes that have sold that are similar to yours. And so, for instance, this one couple that I sold a house to, they got in at the beginning of that home, of that neighborhood being developed. Now they purchased at $200,000, $205,000 for their home at the beginning of the neighborhood being developed. A year and a half later, that home was worth over $300,000. So they made $100,000 by not doing anything, just by living in the neighborhood. And of course, they don't want to move at the time, but if they were to say, okay, well, hey, you know what, we're going to do a cash out refinance. We're going to take that $100,000 and then we're going to go into another home. They could have had that first home that they bought as a rental income property, put a tenant in it. Now they have two homes rather than one, and they have a tenant taking care of the whole mortgage payment for that first home, while steady taking advantage of the appreciation as the years come. And so that's what I would encourage everyone to do as a first-time home buyer. Or even, like, let's say, for instance, a condo. You can buy condos, or you can buy the unit within your apartment complex. Well, we know that rent is steady increasing. Like now, I think, for a nice place, what the rent, a nice 2-bedroom, 2-bath apartment is what, like $2,400 to $2,600 a month. I think that's a good price point for a rental. However, being that you pretty much pay the same thing if you were to finance that home by buying it, you may see that rent go to almost $3,000 eventually. And so now that's $600 to $400 that you can make extra, per month, just by owning it rather than leasing it whenever you get ready to move out.
Right. You brought up condos, and I did think of this question because we brought up condos, and even with houses, people are probably thinking about this. How do you feel about HOAs, and should we be avoiding them or not really considering them a factor when looking for a home?
Yeah, they're going to be there. Now condos have some of the HOAs that I've seen are outrageous. I mean, I think the highest one I've seen, and this was over like in the Milan area, I think they were like asking like $1,500 a month. I'm just like, wow. So cash, you're still paying $1,500 a month, which is ridiculous. Another one where I have an attorney client right now who's looking at condos downtown. Their price point is like $358, dollars a month. Now, what I will say, like for her particular, situation, she just finished college, and so she's only been in her job for 2 months. And this is another thing I want to add. So for those individuals who just finished college, we can actually utilize your college tenure as your work history. And order to help, because it's like, well, you have to had finished school or got a degree in order to qualify for the job that you have. And so, for that, we can say, okay, well, you have 2 years of work history, to be able to qualify for that. But HOA is something that is going to add into your mortgage and is going to affect your DTI, because we're going to calculate that all within the same swoop. So I would say definitely, if you can find a nice property, go with the property that fits you with the lowest HOA, but of course it's something that you're not going to be able to get around.
Yeah. The point is it's going to be in the equation, so make sure you count.
So, and that's going to affect the amount of home that you can afford. So like, let's say for instance, you may have a single family home that's $250,000, and you may be comparing it to a condo that's $160,000. Well, because that condo has a higher HOA, it's going to be the same price, if not more expensive, than the home that's $250,000.
Yeah,
payment wise.
Honestly, I might get some. Well, I don't even think I'm going to get a lot of flack for this because I think a lot of people will agree because I price condos both to build my net worth and also to potentially rent. But I kind of see them as a way of staying in the inner city or somewhere that's like a little more populated and being able to reap the benefits of building an asset while still having the benefits of it kind of being an apartment, because that's essentially what it is.
Yeah.
But the downside is these HOA fees. It's kind of like you're paying the price to have that advantage, because obviously it's going to be very central. Like if you're in downtown, if you're in the city, you're central, you're around all the stuff that you can do. It's easier to have appointments because more people stay in cities, stuff like that. And you're going to be building your net worth up too. But HOA fees, they're going to make sure they get their share.
And what I will say, it's kind of a trade-off as well, because we have seen homeowner insurance increase. And so, being that you are in a condo, or you're priced on condos, the homeowner's insurance is going to be cheaper on a condo because you're only insuring the interior of the property, of your unit.
Right.
A homeowner's insurance on a single-family home, you're insuring the outside and inside. So on the insurance for the condo, you don't typically have to worry about the roof. You don't typically have to worry about the exterior or something like that that's happening, or parking, things like that. But on a home, you do. And so that is something that is considerable, because now, like even a roof, depending on the size of the home, you may be anywhere between, 12 and or depending on where you live as well, $20,000+. Well, on your condo, you don't have to worry about that, because like you said, you get the benefits of like living in an apartment pretty much, where you have a maintenance guy that's going to come and take care of the outside, of your home and things of that sort.
Right. So, yeah, Jahccorian, we're going to start wrapping up the podcast, but I always ask my guests if they have any questions they want to hit me with, but no one wants to hear why you started the podcast anymore. They didn't heard it a billion times. If you could ask that question, that'd be much appreciated, because my audience, they might assassinate you if you do that, and I don't want to see you assassinated.
No. So my question for you is like, what is the best side hustle that an individual can take advantage of right now? Is it drop shipping? Is it Ubering? Is it like what is something that, or is it social media? What would you say is the best side hustle that an individual they can take advantage of, that's wanting just start a business or get away from the traditional 9-to-5?
I might be a little biased in that regard. I don't say it's Uber or anything like that. Honestly, part of the reason I started this podcast is to get people away from that gig economy stuff. Because if they it's dependent on this. And if you piss them off for whatever reason, they'll give you the boot off their platform, and then your side hustle's gone.
Yeah.
But what I really want people to do is get a trader skill. That way, that's something that no one can take that away from you, and you can start making money under all circumstances. Now, I'm going to give you a particular trader skill since you asked me that. I may be biased because this is what I am, but I honestly think that being a video editor is probably the biggest side hustle that has the most income potential, because the reason is the amount of podcasts that are popping up, especially since the pandemic, has just exploded. Yeah, I'm a byproduct of that. The Side Hustle Society was started shortly after the pandemic. But with that being said, you got people who make podcasts just for the heck of it. It's fine. But a lot of businesses are making podcasts, and these businesses have budgets.
Yeah.
They have budgets. And they need editors to edit their podcast, they clip the podcast. Some people might be thinking you could just use Opus Clip to clip the podcast. You can, but that's the very, very bare minimum. If a video editor can take those clips, add B-roll footage, optimize it for people's attention span, which is people have the attention span of a squirrel nowadays, and add the music so you can really maximize it so that they'll get the most engagement out of those clips and the most money on the platforms, whether it be YouTube, Rumble, Facebook, etc. And interesting thing enough is when it comes to podcast editing in particular, you don't have to be the best video editor. Like, people look at YouTube and then they look at something like what Mr. Beast produced, and they think they have to be on that level of quality. And if you are, good for you. You can definitely charge a lot. But if you're a video editor and you specialize in podcast editing, you can get on retainer with these companies that have their podcast that's bringing in a lot of money because they have sponsors, they have their own products, they have affiliate marketing. They can afford to pay you a lot, but they don't really require heavy editing. They require pretty basic editing, and they require you to look at the podcast and identify the clips. But when you compare that to like the heavy YouTube editing, it's pretty basic. So you can make a high 5 figures, maybe even low 6-figure income just from specializing in being a video editor, specifically in podcasting. So that's a very slept on opportunity if you ask me.
Oh, yeah, I didn't even consider that, but I do definitely agree with you. I mean, I have seen a huge increase, of people, that are into, creating their own podcasts. And like you said, even businesses as well, being that, now like that's an additional way to make sure that you are in front of your clients, and people rather watch a video than, read a blog, as well. And so, yeah, editing, I would say, is a huge, RAM, to kind of, have as a side hustle. I think that is great because even like for myself, I have a virtual assistant, and I send her like the videos and I'm like, hey, edit it, add the branding to it, whatnot. And, she takes care of that, which is a huge value, for me being a small business owner as well. So I would definitely agree with you on that.
Indeed. So Jahccorian, where can people get more of you, or if they want to work with you? Feel free to drop your social media, anything you want to drop where people can get more of you or get in contact with you.
Yeah, so you can get in touch with me. I have 2 pages that I operate on Instagram. That's probably the best way to get in touch with me since I'm pretty much always on there. I don't really post on my actual feed. I do more of the story posting. And you can also get with me on LinkedIn by just typing in my name. On Instagram, that's THE_negotiator. So JThe_negotiator. And on my business page, at the Burkes Group, just like it's spelled here on the screen. Everywhere else, you can find me on Facebook, or even if you just Google Jahccorian Burkes, so many different, platforms are going to come up. You're going to see that I have 2 books on Amazon as well, How to Buy a House, Texas Edition, and Finesse 7 Steps to Winning Every Negotiation. It's pretty much that simple. Just type in my name, or you can type in my business name. If you type in my name on Instagram, Getting Negotiated is going to come up the first thing. And my name is pretty unique, so there's not many people that have it.
Yeah, so you benefit because when people Google you, like if someone Googles John, there's a lot of Johns going to pop up, but you have a more unique name, so you'll be the only one to pop up.
Yeah, and that's exactly why I use it. I mean, throughout my childhood, I grew up as going by Corey, and then once I got into the business world, I changed to Jahccorian.
I think that's smart. It's probably something I would have did if I already didn't have like a kind of a centric name. But yeah, when people Google me, there's not that many Elijah Bilels out there. Yeah. So honestly, that's a good business tactic. Coming up with a pen name, it can actually help you with your SEO.
Mm-hmm.
That's something to take away, audience.
Yeah. Mm-hmm. And as far as if you want to check out the website, the website is still in development, but it should be up within a couple of weeks. It is theburkesgrouptx.com.
Cool. Well, that concludes this episode of the Side Hustler Society, everyone. If you're watching us on YouTube, be sure to give this video a thumbs up. It's greatly appreciated for YouTube algorithm. And all the links to everything you mentioned is going to be in the description. If you're watching on Spotify now, since they now have video, if you could drop us a rating, that'd be greatly appreciated. We'll catch you in the next episode of the Side Hustler Society. And like always, be safe and be profitable, everyone.
This episode may be over, but your hustling journey has just started. Visit thesidehustlersociety.com to access all links and resources mentioned in the show that will help you on your hustler's journey.
Okay, everyone. So that concludes the podcast segment of this Money Monday. I think this is a great show to be used as a resource for people who are self-employed or business owners who want to buy a house. So be sure to check Jahccorian out. He's a very cool dude, and he has a lot of resources that can help you with that process. So as far as the rest of the show, got to be honest with y'all. I got a late start because I had an issue with one of my rental units, and that took up the beginning half of my day, which kind of pushed everything back. That's why we started about 30 minutes late. So on the agenda, we were going to talk about Airbnb and their controversial change towards chargebacks, and we were also going to talk about something YouTube related. But because of time restraints, I'm going to do the Airbnb section in just like a separate video because we don't have time for it here. But we do have news. A lot of y'all know that I actually have two channels. Well, more than two, but two monetized channels. The Side Hustler Society and Financial Anatomy. And Financial Anatomy, at the time of this recording, is almost at 10,000 subscribers. We did a live stream on Financial Anatomy to see if we could get it there, and we just came shy. It's literally sitting at 9,999 subscribers. So I thought it would actually be pretty cool to end this stream by going over there and seeing if we can get that last subscriber on Financial Anatomy. So I'm going to share my screen, and we're going to set it up real quick. I'm going to pull up the live stream numbers once I share my screen. All this is in real time, so we're kind of improv here. And let's see. Yeah, so here it is. We can see we're very close to hitting 10,000. And, I think I want to do something special. It depends on if he's available, but I think it would be really cool if one of my nephews could actually be the 10,000 subscriber, and we could do it actually live. So I'm going to give him a call once I finish setting this up. Like, what is that? I don't know what's going on here, but it's fine. So I'm going to give Amari a call and see if he's subbed. And if he's not, he'd probably freak out at the opportunity to be the 10,000 subscriber. Let me give him a call real quick. What's up, Amari? Did I wake you up?
No. I'm just I'm working on like a show kind of pitch to put together for my friends.
Okay.
I'm really busy.
You said you're busy?
That's why I'm not.
Okay. Well, I'm actually live streaming right now, and I got something going on that I think you might be happy about.
What you got, man?
So I'm on the cusp of hitting 10,000 subscribers for one of my YouTube channels.
What?
Yeah, and I was going to ask
Congrats,
you,
man.
appreciate it, but I'm at 9,999 right now. And I was going to ask you if you were subscribed to Financial Anatomy, and if not, how did you feel about being the 10,000 subscriber?
Yeah, well, what's the thing right now? I'll do right now.
All right, it's you type in on YouTube Financial Anatomy.
Mm-hmm. Financial. Oh, yeah, I see it.
Yeah.
Just now. Oh, yes, sir. That's 10K.
Oh, so it's about the update on the. Oh shoot! I just saw it update on the live stream. It's 10,000. So I appreciate it, Mari. You're my 10,000 subscriber.
I appreciate that, man. It's day by day. Thank you, man.
I kind of figured it would.
Yeah, let's go, man. So cool.
Yeah, man, I appreciate it. But since I am on live, feel free to shout your business out and what you got going on your Instagram. You want to give yourself a shout out?
Yeah, sure, man. My name is Amari Stanmore. You guys can follow me on Instagram at TOAO Retro, stands for the one and only Retro. I do short films, music videos. I'm a writer, so y'all go ahead over there and see what I'm working with. If you like it, give me a follow too. I follow back, so I'm a real chill guy.
All right, y'all. So y'all make sure y'all check him out. I'm gonna put a link to his Instagram in the description and the pinned comment. So I'll take the guesswork out of it. Y'all can click on that link, check him out, follow him, and I appreciate it, nephew. I mean, you just made me a 5. You put me into the 5 figures in terms of subscribers in terms of YouTube.
Yes, sir, man. Congrats again.
Thanks. I'll let you get back to doing your writing, but yeah.
All right, man. Appreciate it. You have a good day, man. Peace.
All right. I'll talk to you later, Mari. All right. So Financial Anatomy has officially hit 10,000 subscribers. And like I said, I'll be leaving the link to my nephew's Instagram in the comment section and the description. But yeah, special moment, special day. And I know this is on the Side Hustler Society Monday live stream. So I will leave a link to Financial Anatomy too for those of y'all that didn't know about it, because this is a separate channel. But now that Financial Anatomy has hit 10,000 subscribers, I got some plans. And this goes for the Side Hustler Society too. There's things I've been holding back until we hit 10,000 subscribers. And now we're here. But with that being said, I am beat. I will come out with the Airbnb video separately, okay? Because I don't want to leave y'all hanging in that regard. But that does it for this Money Monday. I will catch y'all in the next one. Peace out, everyone.